All right, welcome to your Global Macro Pulse. We're cutting through the noise to focus on the signals that are really moving the markets today, from the escalating geopolitical heat to a pretty big divergence in central bank thinking. So let's jump straight into the numbers.
So taking a look at Monday's close, you can just feel that risk-off tone. I mean, WTI Crude is the big story here, surging 1.91% to 88.55. That's a clear reaction to geopolitical anxiety. And you can see that pressure is spilling over into equities, with the S&P 500 down about 0.25%. So the big question is, what's really driving this move? Well, the answer is in the Middle East.
The dominant headline, and really the catalyst for pretty much everything we're seeing, is the escalating tension between the US and Iran. And look, this isn't just some background noise. This is front and center, actively dictating oil prices and the entire market's mood right now.
I mean, listen to this rhetoric. It is incredibly blunt. Donald Trump came out and said an extension to the ceasefire is extremely unlikely, and then he followed it up with that statement. Language like this, it forces traders to immediately price in a massive geopolitical risk premium. It's exactly why oil gapped up on the open.
And this is where it gets really murky. You've got a complete divergence in what we're being told. U.S. media is reporting that talks are set for Wednesday. At the same time, Iran's foreign ministry comes out and explicitly says, nope, no plans for a second round. This kind of contradiction creates a vacuum of certainty. And as you know, markets absolutely cannot price a vacuum. This is the real source of the volatility we're seeing.
So here's the direct fallout. That uncertainty premium, it's being paid right now in the oil market, and it's pushing WTI up towards $90 a barrel. At the very same time, that same uncertainty is pushing capital out of equities, putting a lid on any potential rally in the S&P. It's just a classic textbook risk-off reaction to a geopolitical flashpoint.
Okay, so moving beyond the geopolitical headlines, the second major theme playing out is this growing divergence in central bank policy. And this is creating some really clear fault lines, and honestly, some potential opportunities, especially if you're trading Forex.
Let's break down the global policy landscape. In the U.S., you've got Fed nominee Walsh signaling a firm commitment to independence. That's a hawkish stance, and it's supporting the dollar. Now, contrast that sharply with Japan, where the Bank of Japan is expected to stay dovish, which is just keeping the pressure on the yen. And meanwhile, China's PBOC is just holding steady, signaling stability. The key takeaway here for traders is this widening policy gap between a hawkish Fed and a dovish BOJ. That right there is setting up a very clear macro trade.
Now, let's shift gears and zoom into the corporate level, because a major leadership shakeup over at Apple is sending some ripples through the tech sector, and it's definitely impacting after-hours trading.
So Apple just announced that John Ternus is the new CEO, with Tim Cook moving over to executive chairman. The market's initial reaction seems pretty cautious, with the stock dropping over 1% after hours. And this is all happening during a really mixed day for big tech. You had Intel down 4%, but ARM rallied 5%. As a bellwether stock, this leadership uncertainty at Apple is going to be a key variable for the direction of the whole Nasdaq.
Okay, so that's what happened. Let's now pivot to the forward outlook. We've got several key data points on the calendar that could easily trigger the next wave of volatility. So here's what absolutely needs to be on your risk radar for the next 24 hours.
Coming up today, we get U.S. retail sales at 2030. That's going to be our first real, hard read on the consumer for the month. Then at 2200, all eyes are on Fed nominee Walsh's testimony. We'll be watching for any shift in that hawkish tone. Then, overnight, Fed Governor Waller is speaking. He could definitely move the dollar. And of course, the weekly API crude inventory report becomes absolutely critical, especially with the geopolitical premium that's already baked into the price. Every single one of these is a potential volatility event.
So, this leaves us with the central question for the week, doesn't it? We have a classic tug of war. On one side, you have geopolitics driving this risk-off sentiment, and on the other, you have upcoming U.S. data that could completely steer the Fed's narrative. Which force is going to win out? That's what we'll be watching. Thanks for joining the Pulse.